All right, so we're looking at the euro dollar and the dollar index on the left hand side. And I'm going to give you an example of mapping out daily lows with the market profile that we have here, which is consolidation, low probability, as I mentioned last night. And we have the buy side imbalance, sell side inefficiency on the dollar index that may completely fill in. And already it's showing early signs of SMT. So there's smart money technique for correlated pairs or correlated markets. The dollar index, you can see we're making a lower low. Haven't quite completely closed in that buy side imbalance, sell side inefficiency yet, or got to its discount low. But notice that the euro on the right hand side, its recent high is lower than its daily high for December 1st. That should have been, in a symmetrical market, it should be the higher high in euro while that lower low is being formed on the dollar index. I want to see that still in place if we trade down and close in that buy side imbalance, sell side inefficiency on the dollar index on the left hand side. Really slow day today. I was expecting a little bit more fireworks from Fed Chair. So they've been building up the market in a really tight consolidation. They've declined the market. Now think about what they did yesterday. They dropped it first and then rallied it on Powell's speech. Now they're dropping it again ahead of Powell's speech, and we got about a little less than 7 minutes. I want to see a little bit more volatility overnight, and it didn't happen. So we're getting a market reach for a discount. We're trading below dollar daily low for sell side liquidity with a remaining balance of buy side imbalance, sell side inefficiency still potentially available for downside. Key is I want to see that euro confirm that we are only going down to fill in the buy side imbalance, sell side inefficiency on the dollar index on the left hand side with keeping the euro at a lower intraday high. Now, if you look at the intraday high on the dollar index, that's where my interest is. And if you look to the left of that, you'll see there's a small little sell side imbalance, buy side inefficiency. And if we get any kind of confirmation around the 10 o'clock hour, I'll draw more special attention to it with some lipstick. And the euro has an opposing discount array in the form of a buy side imbalance, sell side inefficiency below its intraday low for today. So that's where my focus is as a draw on liquidity. Now it could trade obviously beyond that, but for now, just to frame the market as it is, because we're inside the previous day's range so far. So it hasn't been a whole lot of volatility. We didn't take out yesterday's high or even challenge it, and we haven't really got down to yesterday's low. Now it could blow out yesterday's low. That's always a given. But I think if we see divergence between the euro not making a higher high intraday when the dollar index keeps its lower low, and say we go down and close in that buy side imbalance, sell side inefficiency just below the 95.70 level, and I'll put a line on there in a minute, but I want to kind of like just give you the framework in my mind, what I'm thinking, what I'm anticipating, what would be the ideal scenario, and I'll show you here. I haven't taken any trades. Same thing. Nothing's happened. As I mentioned, it's low probability today, and I've already shown on Monday. Get this closed here. I've already shown you on Monday, which were, in my opinion, the better conditions of trading, because this is all gambling. Okay, this is extreme gambling because you're trading around the expectation and reaction to Fed Chair Powell. And there's highly, highly manipulated markets around those instances in the economic calendar. Okay, a little bit less than 4 minutes until Powell releases the fireworks, if there's going to be any today. And so far, like I said, it's been really, well, lackluster overnight. There wasn't a rush to get to any one side of the liquidity above or below. So to me, it's going to be waiting for the 10 o'clock hour to start its run. And again, I'm favoring Euro diverging like it is here still, but it's ideal if it stays with a lower high and allows the dollar index to close in. It doesn't have to come completely down to that discount low on the dollar index, but if it goes a little bit lower, I'd like to see a nice bold candle reach down, at least get close to it, at least trade below 95.70, at least that would be enough. And then that would be an idea where if you're watching the market and you're not trying to trade, okay, if you're not trying to actually enter the market, which is what I'm suggesting this week now, you don't really engage, you don't put the trade on, but you're forward testing. Okay, so this is forward testing, live data, going in with expectations. You're trying to flesh out an idea. And the whole time while it's doing all this, you want to be getting screen captures. Quickly making annotations, what you think should happen. In this instance, I'm looking for that divergence with SMT on Euro. I want a failed higher high, Euro. What I'm looking for is again, a failed higher high on Euro and the lower low kept intact without blowing out previous day's low. That would be the ideal scenario. But I guess in a wild whipsaw move, dollar could go down there and stab that low, but I don't think it's likely. I think it's just going to try to go a little bit deeper into that buy side imbalance, sell side inefficiency, and then hopefully Euro confirms it. Notice I'm not using SMT as a timing tool. I already have an idea in mind, and it obviously could just run right up there, and not even go any lower. That's always a possibility, but you have to have some kind of framework. So far this looks pretty good. Let's see if we can drop down into 95.70 on that dollar index. And if we get something to that effect and we have SMT, then I'll speed the recording up, because I'm not going to sit here and and talk for 4 hours. I'm not going to do that. Okay, so there's the buy side imbalance, sell side efficiency discount low and the SMT. And I want to see it trade down below 95.70. And if it were to do that, that would be a short on Euro, because it would be technically a long on dollar. That's how I would basically forward test it. There you go. That's what we're looking for. That right there, that's a buy on dollar and a short on Euro. All right, let's see what kind of reaction we get. That dashed line is the daily bullish order block, and we're getting some nice runs. So this is a dub over sped up recording. All right, so we're seeing the market trade above the daily bullish order block, and we want to see it preferably trade back down. That would be another instance where you could add to a long position on dollar or shorts on euro dollar. All right, that right there is a buy. It's trading right at the order block on the 15-minute time frame and inside the daily bullish order block. So far, we're seeing confirmation that it's showing a willingness to want to move away from that. The algorithm, we want to see it reach up into that 95.39, 95.939 rather. That is the opening of the last two down close candles on the daily chart for dollar in the form of a bullish order block. All right, so we have small little imbalance there. Could be a institutional order flow entry drill. Right there, that's a buy there. And the market's showing a willingness to want to expand away from that. That's good. We want to see those higher highs. Nice run there. Again, expansion is what we're looking for. There's liquidity resting right around a 96.05 level and then 96.10. There's a rejection block on that old intraday high and the fair value gap up above where I have the little eye icon. All right, and what you may not realize is this is a 15-minute time frame, but I'm looking at a 5-minute chart and I'm looking at a market maker buy model. So I called the low, mapped out the low to buy side imbalance, sell side efficiency discount low. Then the low risk buy would be the return back to that order block with a little red trend line. And then now we're in another stage of reaccumulation in here. It should go higher off this level. And I was in 95.939 level. That's that daily bullish order block. And make an attempt to run for that 96.05, 96.10 level. And that would complete basically the 5-minute buy side imbalance run on the market maker buy model. Okay, small little consolidation in there. That right there is a nice hit on a bullish order block. It can spell upside expansion. So while we're watching the tape, you exactly what we're looking for right there. We want to see that expansion. That's the very thing that we want to see. Okay, 96.05 is the next level in there. You can see Euro has dropped off its bearish order block and has the institutional order flow entry drill on the mid part of that decline. We turn back to a bullish order block on dollar index on the left hand side. We want to see expansion on the upside now. 96.05 is hit. And we want to see 96.10, and that will clear the rejection block at the intraday daily high. And we'll see if we want to get up into that sell side bounce spot time efficiency I had a little eyeball at. Flirting with that 96.10. There you go, 96.10. And there it is. And here is the 5-minute chart showing you the market maker buy model and the old area of distribution on the left side of the curve with now accumulation for the buy side of the curve. And then reaching above that 96.10 level where the original consolidation was between 5 and 8 a.m. So again, it's just a tape reading exercise. Obviously, no trade was entered. So I hope you found it insightful. And if you like these, I'll probably do more. Be safe.